Now we have a $70 billion deficit, what, 5 times as big, and no one even notices it. Nobody even cares. Not only is there no reaction in the foreign exchange markets, there's no comments at all in the financial media about the trade deficit. It comes and goes in complete obscurity. No one gives a damn. That is because everybody now just takes for granted that it doesn't matter about the trade deficit, right? The dollar is so important. It's the reserve currency. We can have as big a trade deficit as we want, and it doesn't matter. We can have as big a budget deficit as we want, and it doesn't matter. Well, all this is about to change. This is all about to matter again. If the world really is moving away from the US dollar as the reserve, then these numbers, trade deficits, are going to be important again. Budget deficits are going to be important again because these twin deficits are going to sink the dollar. And that's what's really going to complicate the Fed's efforts to both fight inflation and prop up the banking system in the middle of a crisis, because a weakening dollar is going to send commodity prices soaring. It's not just oil. Gold has already reacted. By the way, and of course, this would happen during my vacation week, but the price of gold finally surged above $2,000 an ounce. It did so on Tuesday. So it didn't do it in reaction to the Sunday night news about oil. Gold went up. But what really drove it on Tuesday was the JOLTS number. This is the job openings. And the number came out well below estimates. I forget the estimate, but it came out below 10 million. And that was the first time it's been below 10 million in almost 2 years. And as soon as that number came out, gold spiked. It was up like $40 or something on the day. And then it went up again on Wednesday. I think I saw gold get above 2,030. That was the high. That was also a 52-week high for the price of gold. Now, it wasn't an all-time record high. It was close, probably less than $50 away from a record high. I don't know exactly what the record is. It never got to 2,100. It was around 2,080, something like that. I don't know exactly what it was. I should look it up. But I know that we hit a 52-week high. Now, we pulled back. We were down on Friday, but we closed the week above 2,000. I think we closed at about 2,008 or something like that. Now, I'm watching the markets on Sunday night. We are down $9.50. So we're back below 2,000. We're at 1,999 and change. And in fact, on Friday, I don't think we ever got below 2,000. I mean, we pulled back, but it seemed like 2,000 was the support. And I would think that there's not going to be much downside below 2,000. I mean, certainly we can go below it, but the support keeps rising on the price of gold. I mean, the buying is coming in, and so the people who are waiting for dips are not getting dips. To the extent that there is a dip, it's a lot more shallow than the previous dip. So people who are trying to get a real bargain, they're not getting it. I mean, my advice is, don't be foolish. Don't be too greedy. You want to buy gold, just buy it. Right? It's not going much cheaper. On the other hand, it is going to get a lot more expensive. So it doesn't make sense to wait to save a few bucks. Just buy it, because chances are a year from now, you're not going to see prices anywhere near this low again, especially if the observations that I'm making, and now even more people like, Tucker Carlson can figure this out. If it's this easy to read the writing on the wall, right, it's pretty clear that you need to do something. But if the dollar does tank, which this gold rally is suggesting is going to happen, again, that is going to really make the inflation problem much worse, and therefore it's going to make the financial crisis much worse, because it's going to drive down the value of all the bonds that are on the bank's balance sheets. And I want to get back, though, and discuss the US dollar, because this is very key to understanding what's about to happen to the dollar. We've seen a lot of bear markets in the dollar, over the decades. You go back to the 1970s, 1980s, 1990s, 2000s, there's always been a bear market in the dollar. And the dollar always makes a new low. But then something happens to save it, and the dollar rallies. And what has generally happened at all of these major turning points for the dollar is that the dollar has gotten a lot of help from the rest of the world. And that is the result of the world's efforts to maintain the US dollar-based monetary system. So when the dollar has weakened to the point where it looked like it was going to implode, other countries came to the rescue, either outright intervention. They just came out and in a coordinated way, the Bank of Japan, the Bundesbank, right? All these Bank of England, all these foreign banks would come in and buy dollars, currency intervention to stop the US dollar from falling. And in fact, the most recent intervention that really came to protect the dollar was 2010, 11 time frame, because I think at that point, and this is, early in QE1, QE2 time period, right after the financial crisis, it seemed that the dollar was really going to get killed based on this monetary policy. But a lot of the foreign central banks, a lot of the emerging market economies, they didn't want their currencies to go up against the dollar, which was the natural impetus as we were printing so many dollars and we had interest rates down at zero. That was very negative for the dollar. But all these countries did not want their currency to go up. And so we began the currency war. You remember, everybody talked about currency war. And it was a weird war because the object was to kill yourself, right? Normally you would think, oh, it's a currency war, so you want to weaken your opponent's currency. No, you wanted to weaken your own currency. It was a war where the combatants pointed their guns at themselves and then shot. And I guess if you killed yourself the most, then you were the winner of the war, right? It was a war to inflict the most amount of damage on your own troops, right? That's how ridiculous the currency war was. But the purpose was to save the dollar. It was a war to save the dollar, which is what was going on. The significance of what I'm trying to point out now is we can't rely on the rest of the world to save us the way they've done in the past. I mean, the way they did it in the late 1970s, in the late 1980s rather, in the early to mid 1990s, and then again 2011. You go back to these major turning points where the dollar index bounced off of 80 and then 70 area. It was foreign central banks, foreign governments that were really coming to our rescue. Now, once that happened and once the momentum turned, then, the dollar picked up some support of its own and, started to go up. But it was always speculative buying, I thought, that was driving the dollar, because we haven't had any improvements in the underlying economic fundamentals. The budget deficits get bigger, the trade deficits get bigger. Those are the real driving factors behind the long-term secular decline in the US dollar, which we have. I mean, the dollar started to fall in 1971. Ever since we went off the gold standard, the dollar has been losing value, certainly in terms of gold, because gold was $35 an ounce. Now you need $2,000 to buy an ounce of gold. That's a huge decline in the purchasing power of the dollar. How much gold can you buy with $1? Well, you need $2,000 to buy what $35 bought, before we went off the gold standard. But if you look at major currencies like the Swiss franc, back in 1971, you could get like 4 francs for the dollar. Now they're basically the same, right? So the dollar's lost 75% of its value against the Swiss franc, and it would have lost a lot more than 75% if the Swiss weren't dumb enough, to launch their own currency war to, shoot themselves. to keep the franc from rising too much. They're more concerned about the Swiss franc against the euro than they are against the dollar. And of course, the Europeans have pursued policies that create inflation and so weaken their currency. And so the Swiss were foolish enough to try to prevent their currency from gaining. It's like, they're in a class and they don't want to blow the curve, right? They don't want to score too high on the test. So they purposely get answers wrong so they don't make Europe, who's all in the same class, but not quite as smart, right? Doesn't want to make Europe look too bad, so they purposely blow a few questions so that they have a lower grade. It never made any sense that they do that. But all these central banks do this, and they've been doing this. But the point I'm making is, if we are at a turning point where you have a lot of these countries that have already decided they're done with the dollar,